we will discuss the concept of base year as far as GDP is concerned, the concept of constant versus the real GDP, GDP deflator, items which are not included in the GDP, what are the limitations of GDP, the GDP and its relation with the welfare, green GDP, history of national income in India, right? And in the next slide, in the next session basically, we will discuss the previous year questions also, right? So first we will start with the base year nominal GDP and the real GDP, right? So to understand these three concepts, I will give you an example. So first of all, what is GDP? Gross domestic product. In simplistic manner, the GDP is the total value of all the goods and services produced in the country. This is a very simplistic or commonsensical meaning of the GDP, right? So this is the value of all the goods and services produced in the country. Now, how do we calculate this value? Can we say the value means the quantity multiply the price, right? Or the total quantity of goods and services produced in the country multiplied by their prices, that is the value of all the goods and services, and that value is nothing but the GDP, right? So I hope that this simplistic concept is very clear to you. Now let us take an example, right? For example, in a country, India, in 2011-12, in the year 2011-12, the total quantity production was 100 units and the price of these 100 units was 100 rupees per unit. This is the price, right? So 100 quantity and 100 price, that means how much is the value of GDP? The GDP value will be 100 multiplied by 100 is equal to 10,000 rupees. Can we say that? Yes, we can definitely say that. The value of GDP in India is 10,000 rupees. Now, in the next year, say in 2012-13, in 2012-13, the quantity is 90 and the price in 2012-13 is 120 rupees per unit. The quantity is 90 and the price is 120 rupees per unit. That means the GDP value will be 90 into 120. That is how much? Rupees 10,800. Now please tell me, the GDP value was 10,000 rupees in 11-12 and the GDP value is 10,800 rupees in 12-13. Isn't it clearly indicating that there is increase in the GDP? There is growth in the GDP? Yes, it is very much clearly indicating the same thing, that there is a growth in the GDP, there is increment in the production. However, if we really see the quantity in 2011-12 was 100, the production was 100, in 12-13 this production is 90. So the production has come down from 100 to 90, that is by 10 units. So the production has actually been coming down from 100 units to 90 units, that is by 10 units. So there is 10% decline in the production, right? But still, why here it looks like there is increment in the GDP? This contradiction is there because here the price of the current year is 120 and the price of the previous year is 100 rupees. So just increase in the price, is distorting the picture of GDP. Increase in the price. What is the meaning of increase in the price? Increase in the price means inflation. So this inflation from 100 rupees to 120 rupees per unit is actually giving a wrong picture of the GDP. So what will be the correct picture? If we see in 12-13, the real GDP will be 90 units and the price of previous year, that is 100 rupees. We will take the price of previous year to which we are comparing, the year to which we are comparing the GDP. So here this value comes 9,000 rupees. Now if we compare 9,000 rupees of the current year with the 10,000 rupees of the previous year, now very clearly we can see that there is a decline in the GDP, and which is true. So overall this inflation adjusted amount or the price of the base year is reflecting the real or the accurate GDP, right? It is accurately showing that actually there is a decline in the production in the economy rather than increase. So we really need to take this base price, this price of the last year or a particular year in which we which we are taking as a base. So this 100 rupees, the price of the base year, this is called the base price, and the 11-12, this will be called as the base year, right? So 100 rupees will be the base price because this is the price of the base year, and this will be the base year, or this is also called as the reference year. This base price is also called as the reference price. This base price is also called as the reference price. This 9,000 rupees is called the real GDP, the GDP value which is adjusted by the inflation. So we are eliminating the impact of the inflation. We are neutralizing the impact of the inflation from the value of GDP. That value is called real GDP. And this 10,800 rupees, this is called nominal GDP. This is called nominal GDP. So this nominal GDP is actually showing the value of GDP at the current year price, which is inflated price. So this nominal GDP is showing the price at the current year price. This real GDP is showing the price at the base year price or at the reference year price, right? This is the difference between the nominal GDP and the real GDP. In newspapers, in economic survey, we will find both of them. Right? So we really need to take care, we really need to be attentive that which figure we are talking about, right? Now let us see all these things in language. So base year, nominal GDP and real GDP. This is another example I have given. I have discussed in the previous example very clearly, but again if you want more clarity, you can go through this example by pausing the video, right? Now base year. What is the purpose of base year? The purpose of base year is to calculate and compare the national income of various years. So in our example, we took the base year of 11-12 so that we can compare the national income in 12-13, 13-14 and so on till now. And the national income is calculated with reference to a particular year. So we will take the price of a particular year so that we can eliminate the impact of the inflation, and that particular is called base year. That is called the base year. The price of this year, the price of the base year is called the constant price. So rupees 100 in our example, and this base year in our example was 1112. National income at constant price, right? Or this is also called as the real income, or this is also called as the real GDP. Real income, real GDP, or national income at constant price, all of them mean the same thing. So this basically means GDP measurement at the fixed prices, or the base prices, or the constant prices, right? The price which are prevalent at some point of time in the past, that is in the base year or reference base year price or reference price or constant price. Real GDP is considered a true indicator of country's economic growth. So this is actually showing the growth. In our example, the real growth was actually negative 10%. It was not a upward growth from 10,000 to 10,800. It was not true. What was true was from 10,000 rupees to 9,000 rupees. So real GDP is considered as a true indicator of country's economic growth because it exclusively considers the rise in the production. So it takes care of the production. So earlier it was 100 units and now this is 90 units. So it takes care that okay, there is a decline. There is no growth in the production. So this production is actually declining. So how can we say that GDP is increasing? As the reason for increase in GDP. National income at current price, or this is also called as the nominal income, or this is also called as the nominal GDP, right? Now what does this mean? So it is a monetary value of the economic output produced during the current year and the current price. Simple, this is the current quantity multiplied by the current price. This is very, very simple. The current year quantity multiplied by the current year price. Nominal GDP is current production of goods and services multiplied by the current prices. In case of real GDP, this is the current production multiplied by the base prices, right? So here we can see the example is in current prices versus the base prices. This is the difference, right? What is the base year in India? So in India, earlier the base year was 2004-05. Now this base year has been changed from 2015 and now the base year is 2011-12, right? So our GDP figure is calculated based upon the base year of 2011-12, and now we are also discussing further to update it further to 2017-18. So discussions are going on. We will discuss this separately as part of the current affairs news. GDP deflator, right? So what is deflator? Deflator is something which actually indicates the inflation impact or inflation factor, right? So we just discussed the concept of nominal GDP and the real GDP, right? So this nominal GDP is inflated value and real GDP is non-inflated value. Can we say that? Yes, we can very well say that, right? So this nominal GDP and real GDP, the difference between the two is because of the inflation. This relationship between the nominal GDP and real GDP is indicated by the GDP deflator. So when we divide the nominal GDP by the real GDP, we get the GDP deflator. So GDP deflator is actually nothing but it is showing the overall rise in the prices of goods and services in the country. So this is actually indicating the overall inflation. As I already said, it indicates the inflation factor in the GDP, right? So GDP deflator is nothing but overall rise in the prices of goods and services in the country over a period of time. So when we see at the consumer level, that is CPI, the concept that we already discussed in the inflation chapter. When we see at the wholesale level and that consumer level or wholesale level, that is seen for a particular basket of goods. That is not seen for all the goods. There are selected number of goods for which we calculate the consumer price index or wholesale price index, right? But GDP deflator is for all the goods. There is no basket of goods. Rather, it considers all the goods. This is the very crucial aspect we have to consider in the GDP deflator. So, GDP deflator, or this is also called as the price deflator, right, is a measure of level of prices of all domestically produced. All, the crucial thing is this is considering all domestically produced. It does not consider the imported goods and services, right? So it does not consider the imported goods and services. When I say all, it means there is no concept of basket. There is no concept of basket in the GDP deflator. Final goods and services in an economy in a particular period of time. This is calculated to find the overall rise in the level of prices. And how do we calculate it? We calculate it by dividing the nominal GDP by the real GDP. This is how we calculate the GDP deflator. This is the formula. The nominal GDP divided by the real GDP multiplied by the 100, and that is how we calculate the GDP deflator. This is the example. Here we can see the GDP deflator is 100 here. Here this is 111. Here 116. Here we have 107. Then we have 102, 109, and this is the percentage of inflation. So we can also calculate the inflation with the help of the GDP deflator. But there is some difference between the GDP deflator and the CPI or WPI. So friends, I am assuming that you have already gone through my lecture series on the inflation. In the lecture series of inflation, I already discussed the concept of CPI and WPI in detail. And in fact, I also discussed this differentiation between the GDP deflator versus the CPI versus WPI. But still, I am revising that concept here so that the things become more clear to you and you are able to revise the same thing again and again. The concepts are ingrained in your mind to a very deep level. That is my commitment. So, in the GDP deflator, so this is the GDP. C means consumer price index, consumer, P means price, I means index, W means wholesale, right? So, first of all, GDP actually talks about all the goods and services. This consumer goods or wholesale price is talking about a basket of goods and services. This consumer price index is considering those goods which are consumed by the consumers, and wholesale price is considering those goods which are sold at the wholesale level, and there is a limited number of goods. It is not applicable to all the goods because practically it will not be possible to calculate the prices of all the goods. Therefore, this GDP deflator is different from the CPI and WPI. This is the first difference. Secondly, this is about the gross domestic production. Gross and domestic production. So it considers only domestic production. But the consumer price, the consumer can also buy from outside India. So consumer can buy from domestic or consumer can buy from outside India. So this consumer price index or wholesale price index is considers both domestic and the imported goods. So it considers both domestic goods and the imported goods. Third, in the CPI or WPI, there is a fixed weightage given to the particular items of goods and services. So certain items are having more weightage in the calculation because they are consumed more, and certain items are given less weightage because they are consumed or sold at the low level. But in case of GDP, it actually takes care of actual production. So the weight here is fixed, but here it is taking the actual basis. There is no fixed weightage that is given, rather it is the actual weightage or actual production that is taken care of. These are the difference between the GDP deflator and the CPI versus WPI. So all these points have been given in the language. Even in your PDF notes, I have given this. Here again we can see GDP deflator, it considers all the goods and services. Here it considers the goods and services brought by the consumers only. GDP deflator, it includes only domestically produced goods and services, only domestically produced. And CPI, it includes all the goods and services, right? So it includes the imported goods and services. GDP deflator, it assigns the changing weights. So because it is taken at the actual level, so the weights may be changing. But CPI, there are a fixed weight as per the formula. Here we can see in this diagram, this indicates CPI, this indicates deflator, and this indicates WPI, right? So you can just see the behavior that this GDP deflator is actually in between the CPI and WPI, right? So just to show you the difference, however, nothing special in this slide. You can ignore it also. Now, very important thing. What are the items which are not included in the national income? So this thing we never discussed, but now we will see. So I am giving you 1 minute to think about this. So what are all those items which are not included in the national income calculation? So can you please identify? So you take 1 minute and then we will start the discussion. So, what are the items which are not included in the national income? Let us see. First of all, we don't include the intermediate goods, right? So, whenever we see the definition of GDP, we always say final goods and services, right? We don't say intermediate. Why we don't include intermediate? Because if we include the intermediate goods, that will actually mean a duplication of calculation, right? So that will actually mean duplication in the calculation. So to avoid the duplication, we exclude the intermediate goods, right? For example, if we have to if we consider for example one computer system, right? Desktop computer system. So we will take the value of final desktop system in the GDP, but we will not take those products, the plastic, the chips, the glass, the wire that is used in the production of that particular desktop computer system. Because if we consider wire, plastic, glass, again, that will actually mean the duplication of calculation, because in the total value of desktop computer system, the value of wire, plastic, glass has already been included. So why to duplicate? If we duplicate, then that will be inaccurate calculation of GDP, right? So I hope this concept is very clear to you, that intermediate goods calculation is not considered in the calculation of GDP. Then second, transfer payment. We don't consider transfer payment. So transfer payment, those payment which are made without expectation. For example, gift. For example, unemployment allowance, for example, donations. So these transfers are just change in the pocket of one person to another person. Gift means the money is going from my pocket to your pocket. Unemployment allowance means the money is going from the pocket of government to the pocket of unemployed person. Donation means the money is going from the pocket of a worshipper into the pocket of temple. So there is just change in the location of money. There is no production happening. There is no production activity happening. It is not the primary income. It is a transfer payment. That is why we don't include this transfer payment in the GDP. So in your examination, there can be the multiple choice question where they can ask whether the donation given by one person to the temple is part of the GDP or not. It is not the part of GDP. Whether the gift given by your friend on your marriage is a part of the GDP or not. That is your income. But actually there is no production happening. In the country, if we see at the overall level, there is no production happening. There is no growth happening. It is just shift of income from your friend to you. Third, the sale and purchase of old goods. Old goods may be old house, old car, old computer system. So the sale of second-hand goods, that is not part of the calculation of national income. And why not? Because there is no production happening. It is just shift of the goods from one place to another place. There is no value addition. Value addition has to be there. Some production activity has to be there. And yes, during the sale and purchase of old goods and services, there is a possibility that some brokerage or commission amount is involved, because the person, the commission dealer, the broker, he or she is providing his services. So that part of the value will be considered in the GDP. So you have to be very careful. This brokerage or commission of dealers, this is included. This brokerage or commission of the dealers is included, right? Sale and purchase of old goods and existing services, shares are not included unless they are through an IPO, right? So shares, simply sale purchase of shares is basically nothing but the existing services. But if we talk about IPO means initial service is part of the GDP. Windfall gains or lottery income. Lottery income is it's not a production activity, right? It is just shift of income from pocket of one person to another person. There is no production happening. Black money, we can't estimate, right? There is no way we can calculate the black economy, because if we calculate the black economy, then it will be kind of recognition or formalization of the black money, which we never will do. Work done by housewife. This is very crucial point. So your mother, my mother, most of them are the housewives. They take care of us, they take care of you day and night. Their work is 24 hours. Without them, you and me, we can't do anything. But it is very sad that we don't include their income in the part of GDP. Although they are doing the production activity, but it is not part of the GDP. This is very sad. However, on the other hand, if one lady, one female is working outside home in the restaurant, cooking the food for the guest, then that is part of the GDP. But if the same lady is cooking the food in the home, then that is not included in the GDP. This is very ironical. This is not wrong. Because of this, there is underestimation of GDP as compared to the outside countries. In the outside countries, most of the females are working outside, so their income is calculated in the GDP. In our country, in India, most of the females are working inside the house, so their activities are not part of the GDP. This is one reason why our GDP seems to be very low compared to the other countries, right? So this is very crucial. Now there are some specific items which are included in the national income. You should take care of this. You should actually be aware, be attentive about this specific item which are included in the national income. So own account production of fixed assets by the government, enterprises or household. So when the government or enterprise or household, they are producing for self, right, but they are producing fixed assets, the assets which can be used for further production, then that is part of the GDP. Production for self consumption, this is also part of the GDP, because ultimately what is the crucial thing, the production is happening, whether I am consuming or some other person consuming does not matter. Imputed rent of owner occupied houses, right? So for example, I have a house and I am involving into a production activity, but I am not paying any rent outside to the outside person. So the rent of my house will be part of the GDP. So rent of the owner occupied house will be part of the GDP. Now the question arises, why do we calculate the national income, right? Why at all we calculate the national income? So we calculate the national income first of all for comparison purpose. Comparison internationally, we compare with other countries and we can compare with ourselves also in the previous year. So inter-period comparison also done. Analyze the standard of living. So to some extent the GDP indicates the standard of living. If the GDP of India is 10 unit and GDP of USA is 100 unit, we can clearly say that standard of living in terms of the material being is better in the USA. So in a way this GDP very well indicates the standard of living, and this is material standard of living. I am not saying spiritual, right? It does not mean happiness. So there may be happiness or there may not be happiness, but one thing is sure, that there is bound to be good standard of living. Analyze changes in the distribution of income between income groups, right? So what is the change in the distribution of income? Are the rich flourishing or the poor flourishing? Whether the income gap between the rich and poor is decreasing or increasing? Inequality, inclusive growth, sustainable growth, all these aspects we can judge only with the help of the calculation of national income. Assist the government in policy decisions. So the government can take the policy decisions about poverty. If most of the people per capita income is very low, the government can actually just take that particular decision. So the decision regarding the poverty, unemployment, the policies regarding them can also be based upon the calculation of national income, right? There are some limitations in the estimation, right? What are the limitations? So till now we discussed some of the items which we don't include. Now we will discuss some limitations or drawbacks in the calculation of national income. So I'm giving you 1 minute to think about. So think and then we will discuss. Okay, so what are the limitations in the estimation of national income? First of all, we don't include the output of non-monetized sector, and the best example that we gave was the activities done by the household housewives. The activities done by the household housewives those activities are not included in the GDP. So we actually miss a big part of the economic activities. Second, there is a lot of issue about the data. Data is becoming a big problem, especially at present. The government is saying this is the data, the opposition party is saying something else, and even otherwise also, if we look beyond the politics also, the data is not easy to find. There are small shopkeepers, there are unorganized workers, rickshawala, small farmer. We can't actually see, calculate the exact amount from them, from those people, because they are not reporting any data to the government. There are big companies, Tata, Reliance, Airtel, they are filing the written balance sheet, but the small shopkeepers, they are not filing any income. They are not filing data regarding their production. So the data becomes a big problem, and this becomes an issue of controversy. And in the absence of good quality data, we cannot calculate the national income to a very good level, right? Then illegal income. Illegal income remains unreported. Yes, illegal income. So there is a lot of illegal business happening, smuggling happening, illegal production of wine is happening, right? Illegal production of many toxic items, crackers is happening, but that is not part of the GDP. So in a way, it is not a complete picture of the country's economy. Conceptual problems, like which item should be included or which should not be included. About the government, whether the government activities should be part of the GDP or not, that is always a point of controversy, because some people say that it is a productive activity because the government is creating a conducive environment for the business. So all the activities of the government, they are productive activity. And other school of thought say that there is no production happening in the government, there is no direct economic activity, so we don't include. So this is a conceptual problem. This is also a limitation. Other than that, the distribution of income is not reflected in the GDP. So we can't actually judge the level of inequality, right? So for example, in India, the GDP is increasing, but is the GDP increasing for every person? No. The GDP might be increasing for rich people, for upper middle class, but is it increasing for the low class, for the poor people? No, that is not happening. So that increase in the GDP or change in the GDP not necessarily reflect that what is happening with different segment of population. So it does not reflect the inequality, the gap between the rich and poor. So this part is very, very crucial. No account taken of nature of goods. So nature of goods, whether the nature of goods are good or bad. Are we producing crackers or are we producing milk? We don't differentiate. What we judge is the total amount of goods. So we are not differentiating between the beneficial goods and the toxic goods, whether tobacco or wine. We are including all of those items, right? And friends, please be attentive that in the previous slide I said the items which are not reported, there is some illegal production also, right? So in the illegal production, there can be production of cracker, there can be production of wine, but that is unreported, right? Here I am saying that the goods which are reported, we are including the goods which are reported, which are legalized, which are formalized, which are under the government license, right? So we are including the production of wine, but we are including the production of cracker, and we are not differentiating that from the production of the basic goods, the food items, right? So we are not differentiating between the nature of goods. We are just seeing the total quantity. Fails to take into account the population. So we are not able to see whether the increase in the population is matching with the increase in the GDP. So there is a possibility that GDP is increasing at 5% and the population is increasing at 6%. So overall, at the per capita level, at the individual level, there is a decline in the GDP. So this population impact is ignored. This population impact is ignored in the calculation of GDP. Then it would not explain the level of government involvement. We can't see how much is the government involvement. Then using GDP stats to measure the standard of living is very oversimplistic. Yes, we can't judge the standard of living of a country just based upon the GDP, because the total GDP may be having a combination in a way that only few people are having most of the GDP and most number of people may be having very few GDP. So in case of inequality, standard of living cannot be judged by the GDP figure. GDP figures don't show human standard. Yes, human standard, human development standard. For example, life expectancy, adult literacy, educational attainment, women empowerment, happiness, all those things we cannot judge, right? So this is the limitation of the GDP. So GDP is actually more of financial term. It does not take into account the non-financial terms, the non-financial aspect. It is over focusing upon the financial aspect. What are the other limitations? It does not measure the depletion of natural resources. It does not measure the depletion of natural resources. So for example, if there is a production of 1000 units, right? So because of this production, the GDP will increase. But if because of this production, there is air pollution, and this air pollution is killing many people, right? For example, it happened in Tuticorin district, where one of the plant of Vedanta was established. So a lot of people were killed because of the different kind of pollution. So this depletion of natural resource and the negative impact on the people, that is not taken care of. We are cutting the trees. We are displacing the tribals. We are displacing the local wildlife, the animal. So we are not taking care of that. Increase in GDP does not mean that everything is good. There is a possibility that there is factory production, but in reality, the people are suffering, right? It ignores the economic contribution of women in running household. We have discussed this point. It does not factor change in the output quality. Yes, so output quality may be better previously, but now the output quality may be worst. For example, earlier the mobile services network was very good, but now as the prices are reducing, the network quality is becoming poor. So this quality of goods and services is not taken care by the GDP, right? So quality of goods and services produced is not taken care by the GDP. It does not factor impact of artificial intelligence in the employment. So the people are getting displaced, the jobs are reducing because of artificial intelligence. The artificial intelligence may be increasing the GDP, but the jobs are coming down, but that is never reflected in the GDP. If GDP is increasing, we become happy. We don't see how much it is impacting environment, how much it is impacting the employment and other things. It does not measure whether the GDP adds to the happiness of the citizens. Very crucial. So it is not always that if you are rich, you are happy. Happiness is a state of mind. You might be having nothing, but still you can be happy. You can be IAS officer, but still you can be depressed. There are many examples where the administrative officers, they are killing themselves. They are doing the suicide. But a simple rickshawala or a common person, he or she may be very happy. So happiness is not directly linked to the GDP, right? The people may be having high GDP in the USA, but are they really happy? That is a question to inquire. I am not saying that they are happy or not, but that is a question to inquire. Bhutan is a very small country. The GDP of Bhutan can be very small, but they are really happy. Their GDP is not adversely impacting the environment. Right? So happiness is different from the GDP. Happiness is different from the GDP. So you may be rich but not happy, and you may be not rich but happy. There is no direct correlation. There is no direct correlation. Now coming to the GDP and welfare. Is GDP equal to welfare? No, not necessarily. How? Higher level of GDP does not mean the greater level of well-being, because first of all, the distribution of GDP may not be uniform. There can be inequality. Right? Non-monetary exchanges are not accounted. Right? Externalities are not accounted. So for example, there is production of 100 units, and this production of 100 units is polluting the environment, and another production of 100 units, for example, because of the organic farming, it is actually contributing to the environment. So this GDP is good, but this GDP is bad. But this externality means the benefit or harm that any firm or individual is causing to the another, for which they are not paid or penalized. Right? So this externality is not taken care in the GDP. So GDP is not directly linked to the welfare. GDP fully does not measure the nation's productivity. So GDP is an aggregate measure, but not judging the productivity also, right? So GDP does not measure the well-being. So GDP takes care of consumption, depreciation, everything, right? But does it really take care of living condition, environment, health, education? Does it really take care of the happiness which come from genetics, family, friends, work satisfaction, community, right? Yeah, sometimes it can take care of economic well-being, but not completely. For many people, there can be a lot of insecurity, there can be a lot of unemployment, there can be inflation, right? So all these aspects are not taken care of by the GDP. So living condition, happiness, that is not taken care by the GDP, and economic well-being, that can be partially taken care by the GDP. Now coming to the concept of green GDP. Green GDP, so green, something which is related to the environment. So I just discussed that there is a lot of production happening which is adversely impacting the quality of environment, right? And when we calculate the GDP, we don't consider that. But green GDP is a term which actually factors in or considers the environmental impact of the economic activities, and it actually refines the GDP calculation by factoring in or considering the environmental impact of the economic activities. So we are able to neutralize the adverse impact of the environment by adjusting the GDP figure because of that. So it is an economic growth index that quantifies and calculates the environmental consequences of that growth. So if the environmental consequences are negative, then we will reduce the amount of GDP. If the environmental consequences are good, for example, because of the organic farming, then we will increase the amount of GDP. So the amount of GDP is actually adjusted to according to whether the environmental consequences are good or environmental consequences are bad. Green GDP monetizes the effects of loss of biodiversity and cost of climate change. So how do we adjust the GDP? We actually adjust the reduction in the natural capital stock. We also take care of the expenditure on the environmental protection. So if we are expending some amount for treating the air or water to maintain the quality of air and water, that is adjusted in the GDP. Environmental degradation, if there is some loss or gain in the economic service flow because of the GDP activities, that is also taken care. Now, history of national income in the India. So this history of national income, it goes back to the Dadabhai Naoroji. The first estimate of national income was done by the Dadabhai Naoroji in 1867-68, around 150 years ago, in his book Poverty and Un-British Rule in India, which is famous for its drain of wealth theory. First scientific estimate was done by Professor V.K.R.V. Rao in 1931-32, right? So approximately 60 years after Dadabhai Naoroji first estimation, scientific estimate was done by Professor V.K.R.V. Rao. Rough estimate was done by Dadabhai Naoroji. Government of India, for the first time, it estimated national income in 1948-49 after the independence, and this work was done by Ministry of Commerce at that point of time. National Income Committee was set up under the chairmanship of statistician Mr. P.C. Mahalanobis, and P.C. Mahalanobis was also chairman of Indian Statistical Institute. So here we can see Dadabhai Naoroji, he estimated for 1868 the national income was per capita 20 rupees, right? Per capita 20 rupees for 1 year. Then V.K.R.V. Rao, he estimated for 1931-32 and it was 62 rupees per annum. In 1945-46, 198, which was estimated by Ministry of Commerce. You need to just keep in mind these three things. Now, at present, the calculation of national income, it is done by Central Statistical Organization, or this is also called as the CSO. It was established in 1950 and it is calculating national income since 1956. It is publishing national accounts statistics on an annual basis, and it is under the Ministry of Statistics and Program Implementation. Please be careful, this is under the Ministry of Statistics and Program Implementation. Now CSO has been merged with National Sample Survey Organization, NSSO, and now this is combined organization is called National Statistical Organization, or NSO. So at present it is the NSO which is calculating the national income. With this I complete this session. Friends, I hope you really enjoyed this session, right? In the next session we will discuss the previous year questions, and there has been a lot of controversy around rebasing of GDP. What should be the correct base year of GDP, whether the calculation of GDP is right or wrong. All of those things we will discuss in a separate lecture in the current affairs on the national income, right? So till now I have covered the statistics concept. For the current affair I will make the separate lecture. Thank you very much.